Hello friends, now that Nifty has fallen in 5 waves on daily chart, as you can see 1, 2, 3, this is 1, 2, 3, 4, 5 within 3, 4 and then 5. So now it's kind of confirmed that the trend has now changed to downside, and likely we will see more downside. So now the question is how big this downside could be. So in this video I will try to answer that question using Elliott waves. So this is the complete chart of Nifty 3-month quarterly chart, which has all the data in it. So I was also confused about what kind of retracement we should expect when the Nifty has started kind of falling. So would it be from the COVID lows, which was here in March 2020, or would it be something else? So for that I had to mark this chart with my counts, and here you can see the counts. Don't worry if these are not visible clearly, because this is a longer time frame chart, and many of the markings are for shorter time frames, so they are overlapping with the bigger time frames. So but the big picture is this, you see 1, 2, right? So let me, yeah, so this is 1, this is 2, this whole thing is 3, this COVID low was 4, and right now this 5 is going on. So we are somewhere in between of 5. Actually we have just completed 3 of 5, and right now 4 of this 5 is going on. So basically what kind of retracement we will expect here is for this leg, this wave 3, 2 to 3. So we are actually looking for, sorry, not even this, we are looking for a retracement of from this 2 to this 3, this one. So we are looking at retracement of this. So how does that look? Let me try to go to a smaller time frame so you can. So yeah, so from COVID lows we ended the longer term wave 4, and from there we made this wave 1, then wave 2, then this new wave started. So this was wave 1, 2, 3, 4 and 5. You might feel that this is 3 wave, how this could be an impulse, but if you drill down to a smaller time frame, to daily or weekly time frame, here you can see this is 1, 2, 3, and this was a triangular pattern whole thing, and within 5 we can count 5 waves. So this is not actually a 3 wave, this is an impulse, and followed by 2, and then this was, let me mark, yeah, so this is 3, this is again a triangular structure in 4, and then we had this 5th, and after this 5th is done we have started moving down, and we can see this 1, 2, 3, this is 4, and then 5th is going on. This 5th will be once this is done. So we are still waiting for a positive close. Once we get that, our initial assumption would be that 5 waves down are done, and then we will monitor it for like there are further extensions or not, but that would be the first signal that okay, maybe now this 5 wave are complete and we might expect a bounce from here. So this would be wave A, and then a bounce would be wave B, and then once the B bounce is done we should go back down in wave C. So for simplicity I have marked it ABC for now, and also because we have fallen so far in 5 waves, so this is I'm taking an A, but this could eventually turn into, you know, any kind of correction. It could become like a double zigzag WXY, triple zigzag, or, you know, combination of those things. So at high level, we expect that a retracement of an impulse typically goes till lower degree wave 4, so which is here, and this is at 21,284 roughly. And in terms of Fibonacci retracement, let's do for this wave 3. So 50% is 20,739. 61.8% is 19,429, 19,400 roughly. So this is what I expect should be the worst case pullback in this particular case, but we still have to observe and see how this wave evolves on the downside. It's not like hard and fast that this fall would stop here. It could go deeper, or it could even stop somewhere before, but it's likely that we should at least do a 50% or at the minimum this wave 4 low. So that is 50% and wave 4 low are quite close, 21,284 and 27,40. So this zone is very likely that will be touched, and in case there is a deeper retracement, 61.8% is another good level to watch out for, which is 19,429. So this is what I feel the retracement would look like, the currently ongoing pullback in Nifty 50. And once this is done, this is like ABC, WXY, we don't know at this stage how this will evolve, but once this is done, that would complete this wave 4. And once this wave 4 is done, we will be doing or finishing this longer term wave 5 of this very, very large or grand super cycle kind of wave, which started from the beginning. If I go back to monthly, or let me go to 3 months. Yeah. So this is the cycle. This cycle will end, which started from this beginning will end, and after this is when we should actually expect a significant, very, very significant down move. And if you see these 5 waves, the previous 4th degree low is here, which is at 7,000. So this would come into picture, but this is a different story altogether. We don't really have to worry. We don't even know for how many years this wave 4 and 5 together will go, and when exactly that might happen. Or maybe like this 5 will become 9, it could keep extending. So we don't know at this stage. So that was just basically a very simplistic view. When 5 waves are done, we expect a retracement. So for now, I guess this is what we are looking for. So once this is done, A, then we should have B or X or whatever kind of correction this is, and then we should go back in C or Y down. Typically these longer term corrections, they occur as double zigzag, so it could take something like W, X, Y, X, Z, something like this, and it could take a lot of time. I mean, it could waste a lot of time. But if it has to happen fast, it could be simply ABC kind of correction. But if it has to do a time-wise correction, then it might actually run for a longer period of time, and it might take this shape. So I hope you get some idea now what to expect from this downfall. And that's all for this video. See you in the next video. Thank you for watching.